welcome back to Property Matters on Dublin South FM with myself, Carol Tallon. You can contact us on social media at iPropertyRadio or email hello@iPropertyRadio.com. For our Proptech interview today, I'm delighted to be joined by Nicholas Kirby and Leon Ballard, co-founders of Leased. So Nicholas and Leon, you're both very welcome. And I was very excited to talk to you today because one, look at your website to learn a little more about you. And I'm happy to learn more about a team who starts their story with, our story begins one very late night in Vegas. Nick, tell us a little bit about Leased.
Hey, Carol. Thank you very much for having us. So Leased is a software platform that's delivering faster, better leasing to commercial real estate companies. So just to dive into that in a bit more detail, we're helping them generate more revenue faster with less time and resources than they do currently. And, you know, it's the process currently, we say faster and better because the process currently really is messy and horrible for everyone. It takes too much time. There are too many people involved. It's very fragmented. And really that's where this was born. So you mentioned this long night in Vegas, and, you know, Ed, Leon and myself have had many arguments about how the leasing process is broken, but also who breaks it the most. So it's a constant battle between the lawyers and the agents. I think the lawyers lost in the end, but ultimately, you know, that's where the passion for solving this problem was born.
I think that's a really interesting way to frame it, because we always concentrate on the problems. We always concentrate on the process and where it's broken. I've never really heard it questioned as in who breaks it the most. It's a really good question, though. So tell me, you talk about making leasing better and faster. What's your starting point for that? I mean, are you talking about maybe going into the traditional industry where there isn't technology in place at all? Or are you starting from the point where, you know, over the last 5, 6, 7 years, there's been bits of bitty integrations, you know, that haven't worked very well, you know, technology that isn't really fit for purpose. So, like, what are you making faster and better? What's your starting point?
Well, I think what we did is we unpicked the problem from start to finish. So from the moment a tenant engages with the landlord, so the negotiation piece, and then we went back a step and said, well, at that point when the tenant engages, what do we need? And the point is, there's a lot of preparation that doesn't get done in the current state of play, that the landlord can do well in advance of ever identifying a tenant. So what we do is we gamify the preparation piece, and that provides deal momentum into the negotiation, and that momentum is carried through heads of terms negotiation into the lease automation and through to digital signature. And
when you say, sorry to cut across you there, when you say gamify, can you explain that? Because we know, you know, that's definitely one of the buzzwords at the moment. It's definitely something that B2B providers are really trying to do, and it's difficult. We haven't seen many pull that off in a way that works. Can you just explain that element, please?
Well, gamification is all about incentives and transparency. So predominantly it's a property manager that's going to prepare a space ready for lease. Now, they would typically have their documentation around the landlord's company, around their own files on their own desktops. But what we do is we engage them to put it into a central portal, and there's complete oversight from the leasing team as to where that documentation is and how much of it is complete. Therefore, the property manager is incentivized to get on and get their portfolio ready, and the remaining stakeholders are incentivized to keep communication channels quite clean. And that's the sort of the gamification piece of it.
Okay, so how does the technology work?
So the technology works. I mean, on that specific element for now, ultimately what we're trying to do, as Leon said, is really encourage people, make the process more fun, and effectively say, look, can you complete your readiness score for these assets that you want to lease and you want to lease quickly? And it's encouraging, making it almost a team event. So for that part of the product, you know, we're effectively a sort of complex data room which delivers, you know, specific items for each person to complete. The relevant person needs to complete them. They're divided up amongst tasks. The rest of our technology is a negotiation platform. It's not like Word track changes or Google Docs where you've got multiple parties making changes all at the same time. We're much more like a game of tennis. So you're at one side, then the other side, but it's a collaborative process. So the home team and the away team are there to collaborate together to streamline what is a really fragmented process and ultimately to make it a bit more modular. So we're delivering outcomes rather than words and numbers. We're trying to deliver what do people want as a result of this negotiation, helping them achieve that faster.
Okay, I like the modular approach, because actually one of the things we've seen in the past, particularly with the earlier waves of technology, there was companies trying to do it all, not perhaps fully understanding the scale of the problem. Whereas a modular approach actually lets the client and the user feed into that. So actually, it's not your assumption of the problem, it's actually the problems that need to be tackled. You touched on readiness score. Is that what I imagine to be? Is it a digitized version of maybe the old analog system that letting agents would have used in the past?
Yeah, ultimately, exactly, but it's sort of specific to the sector, maybe specific to the type of real estate that's being let. So if you've got plug and play, it's different to if you've got a pre-let or if you've got a complex office portfolio or an industrial portfolio. So we're really trying to normalize what people need in order to transact quickly and to deliver that to the property managers and to help them that become a team event to make real estate ready. And then for the tenant, we're giving them what they need to make a decision on a piece of real estate quickly and to transact quickly after that at the beginning of the journey.
How long are you guys active in the market?
We launched having done our first deals with Shaftesbury. We launched in August, so August 21. So we've been going for 4 or 5 months now. And it's been great. Off of the back of some really positive press, some really good reviews. Market sentiment's really strong, and we've been signing up some really nice, interesting clients over the last certainly December and January. People seem to have come back to 2022 with some desire, and obviously this post-COVID world where tech adoption has been, quite expedited. We're excited that people are really interested in the product.
Yeah, you're coming at this at the right time. The fact that, to be fair, the industry is always called a dinosaur, and I think that's perhaps a little unfair. In fact, only the last week or two, I was interviewing Ben Lerner of Lerner Associates, and he was able to chronicle Proptech going back 40 years. And in fact, he got his start in his father's business, so I thought that was a really interesting way. It's an industry that's criticized as a whole, but actually on the facilities management, on the asset management side, actually, it's been a little more tech advanced than I think people realize. But where do you fit in then? Because I would imagine that you're selling to customers who were looking for solutions 5, 6, 7 years ago.
Yeah, look, so we fit into this. I always describe it as sort of 4 segments to commercial real estate. So you've got that. Section 1 is basically vacant space, people trying to find and market their vacant space. Section 2 is the commercials. Section 3 is the legal. Section 4 is property management. And you're right, Section 1 and 4, lots and lots of technology surfacing around those problems. The segment we're dealing with, the agents and the lawyers and commercial real estate and the legal industry is definitely far behind the curve in terms of tech adoption, and has always been criticized for that. But I think that's definitely changing. It definitely feels like it's changing, even pre-COVID, post-COVID, though now, agencies, lawyers, commercial real estate owners are really upping their game in terms of adoption. I think the market's helped with that. So you've got occupiers now that want space that's ready for them to move into. So the physical space is changing. We're plugging in and trying to help the process that fits around that physical space change and catch up a bit. So I think that's where we fit, and I think it's a super exciting time, as you say, for us to be solving this particular problem.
You know, it is. And coming into this interview, you know, I'm always interested for people who are at the coalface, you know, selling new products and services into the industry. I'm always interested to know how they're being received, because I have one view of the industry. And in fact, I think it's a lot more willing to embrace new and emerging technologies than it gets credit for. And I think that's really been accelerated since COVID. But because you're trying to bring the legal sector and tenants from a range of sectors into this, there's a much bigger culture shift that you need to deliver. How is that going? Because I appreciate that it really only has been a few months, you know, so how is that challenge being tackled?
It's been received very well. I think where our product really sings is on the, as Nick said, is on the fitted space, where landlords have gone out and they've done a lot of work shortening their lease, and they're offering more flexible terms. And so that's where our product immediately fits day one. And then as we develop and build out the complexity, we're doing more and more complex transactions, larger spaces, and then we've just opened up our verticals, so we can now do retail, we can now do industrial. So we're looking forward to building those out as well.
Actually, what I really should have asked this off the top, but what backgrounds do you both come from?
So
can you go first?
Yeah, so I'm an ex office agent turned investment agent, having worked in London and then in Poland. So spent 5 years in the London West End market, predominantly doing tenant rep work. Our other co-founder is an agent, 15-year agent in the West End, and Nick.
So I'm a lawyer. I'm still a lawyer. I'm a partner at Mishcon de Rare. And I think, you know, it's a really good fit between all three of us, despite the arguments about who broke it the most. But it's a really good fit. And I've always been passionate about making lawyers more efficient, helping them free up time, making us as an industry a bit more progressive in terms of tech adoption. It's been really exciting to see over the last 5-10 years as that has really, really accelerated. And so, you know, what we've always talked about is this idea of momentum through stage 2 into the stage 2 and stage 3 that I talked about. So, you know, the idea that we can get landlords and tenants and agents and lawyers excited about stage 2 and the changes we can make in stage 2 will then drive behavior change through stage 3. So there's still a lot to do for us in that stage in terms of really driving efficiency in the legal part of this process. But, you know, we're excited about having sort of really conquered stage 2 and then making our impact on stage 3.
Yeah, in terms of a Venn diagram of founders and backgrounds, you know, that's a lovely complete one. Then, you know, when you have the legal, you have the office, you have the tenant engagement and the tenant rep side of it, you know, so that really does bring a very complete sense of understanding the market, so therefore maybe understanding the challenges, but it also, you know, you can actually look at the trends. So for example, you mentioned there that part of your work involves, you know, looking at an offering around shorter leases and more flexibility. And frankly, there's work to get landlords to understand that actually that's where the market is going and that's what tenants want. And in some cases, it's not even the mindset of the landlords, it's the financing arrangements that they have. You know, they're just not in a position to be as flexible as they need to be or to look at those shorter leases. So how are you balancing the changing needs of the market, which is definitely towards a more agile, flexible, you know, shorter commitment, to the needs and financing needs of landlords?
I think we're probably acting as a bit of a catalyst here, because what we're seeing now is lots of certainly where we've started is in central London with the estates. Now, whilst they are long-standing institutions, because they're not trading in and out of their assets, they can actually look at shorter form leases. So they've actually spent the last 2-3 years doing the physical work, doing the legal work, and we've come along at the right time to help with the conveyancing. Where we'll meet, you know, where the trend has got to push is into the asset managers, the investors that are trading in and out, and they want to be trading longer leases for higher premiums. But I think what the market is realizing is that as long as you can reduce the void, then you can get long income streams. But it just means that you're giving the tenant the flexibility over 2-3 year leases rather than the 5-year, the 10-year leases. But what's key to that, and where we really help, is that we are reducing that void. So that is what's going to de-risk the investment and allow the market to move towards trading in and out of shorter form leases.
Okay, and thank you for going through that. It kind of puts a nice bit of context on the industry side of it. But at the back of my mind, I'm thinking you're still at quite early stages, you know, in the market since August 2021, and it was a non-typical market. You know, so I don't think we're going to go back to whatever typical is or was, but you know, you're certainly coming in at a time of change, at quite a transformative time. So I'm interested in the startup dynamics now, given that you're so new. Is the company funded?
Yeah, I can take this one. I think we're new in the sense of our launch to the market, but I think, you know, a lot of work went into getting to last year and launching with Shaftesbury. We did our first fundraise in 2019 in December, and then another one in early 2020. And, you know, that first fundraise got us a product, an MVP, out talking to people, understanding whether or not it was properly solving their problems. I mean, it was quite stressful launching a commercial leasing business in the middle of a pandemic when no one was taking any commercial leases. That was slightly panic-inducing, I think, for all three of us. But exciting nonetheless, because of the market changes that have been driven as a result of that. We were lucky enough to have that funding, to be able to use the time to build it, to talk to people. And then in 2020, we've used that to launch publicly with our clients, as Leon mentioned. And we've worked really, really hard, talked to lots and lots of people to get where we are now. And I think it's, you know, to everyone else out there that's in the same place as we are, I think, you know, it's starting to pay dividends now. All of those conversations that we've had, we're having people coming back to us now to say, hey, we've heard about you from someone else who's using it. It's really great. Can we come on board? So I think, you know, all of that hard work will pay off eventually, even if you do feel like you're banging your head against the wall sometimes.
Yeah, I think that's part of the startup, or certainly part of the founder condition, that you know, really it has been a difficult time. But what's interesting, I think, is how quickly startups and scaling companies can shift. So what's interesting there is that actually you did your first fundraising round prior to COVID. So yeah. What had to change? Can you talk us through the business model, maybe just very briefly?
Yeah, we charge a subscription fee for asset managers, and then a transaction fee for a successful transaction. So that's allowed us to keep that subscription fee low and to effectively, you know, share in the success of transactions, which is, I think, a model that works well for the real estate industry. The business model hasn't really changed since we started. I think the thing that has changed is because of this market dynamic and more plug and play and shorter leases, you know, we've been able to really get involved end to end faster than we expected to be able to. So in a traditional market, we've got lots of 10-year leases. It's much more difficult for us to get involved in just closing a standard form lease. But with shorter leases, more reasonable terms, we've been able to really get involved in that end-to-end process, all the way to the lease completing.
So what are you seeing in terms of trends? Because, you know, the future of work, the future of workplaces, how we're going to use the office, you know, that's so much up in the air at the moment. I don't believe there are any experts in this. I don't think anybody knows yet, because actually, as humans, we don't yet know how we're going to react. You know, we're still not fully post-COVID. So we can't take the learning yet. We haven't had time to absorb, but we haven't had time to understand what this is going to see. What trends are you seeing in terms of offices and workplaces right now?
Well, I think what it's all going to do is going to expedite that whole flexibility point. I think it was JLL said that by 2030, there was going to be 30% of the market would be flexible workspace. Now, I think the reaction of the companies post-COVID is that they do want an office, they do want to collaborate in a workspace, they do want to offer their staff flexibility to work at home 1-2 days a week. But what that all comes back to is they don't know how their business is going to be 2-3 years from now. So they want the flexibility on the lease term, and they want a more collaborative working space. So it might be that the actual office space itself changes a little bit. It becomes a little bit more meeting room friendly, a bit more social. I think even in the way everybody's communicating in this post-COVID world, it's more casual. And I think so the office space is going to reflect that. Okay,
very good. And just in terms of, and I appreciate that it's early days and it's a time of transition, what are the objectives for 2022?
Well, we're just commencing our seed raise at the moment. So we've just gone to market as of yesterday. With those funds, we're going to be really resourcing our other verticals. So at the moment, we've been focused on offices because that's our background, but we're going to be opening up industrial and retail. It also gives us scope for wider geographies. So delighted to be talking to you in Ireland today, because that's certainly a market that we'll be looking at very, very soon. We've already gone to Scotland, so Ireland can be next, absolutely. And then we're building out our team. We've employed some great people, Aaron and Emma on board, and we've got David joining us as the CTO, and we're going to bring our tech sort of a little bit more in-house. And really drive the business forward, listening to our clients, understanding what they want, the iterations of the product they need, and really making sure that we deliver on that.
You know, we talked about how it's a transformative and such an interesting time for the office market, you know, equally industrial and retail there, you know, so you're actually, you're coming into these sectors at a time where the change, I mean, in terms of retail going to more experiential, I think that just opens up so many opportunities there. And industrial and logistics, the demand there is such that I'm almost wondering what will be your pipeline coming in, how, you know, these aren't properties that are sitting there waiting to be used. I mean, you know, it's such an intense time for industrial and logistics. You know, have you any forecast on that for 2022, or is that likely to be a longer term?
Well, I think we want to engage with those parties as soon as we've got the resource to do the work, and that's part of the raise. That's part of scaling up. We're certainly seeing that there's going to be, you know, a lot more logistics and you know, transactional or industries that are built on, you know, online retail and things like that. And then you mentioned the experiential part of retail. Well, what we're engaging with a client at the moment and rolling out on their pop-up portfolio. So again, when you talk about investment values and things like that, pop-up is about quickness. It's about, you know, it says it on the tin, you know. You don't want to be engaging in long legal processes to get your pop-up agreement. So, you know, why not engage in a leasing transaction that can do that quickly and get the pop-ups up and running?
I look forward to seeing what you guys do. Best of luck with the seed raise, and thank you so much for taking the time to go through the business today. So your website is Get Leased, Least. Is that correct?
That's it.
Super. Okay, well, look, best of luck with the seed raise. We look forward to seeing you hit the Irish market shortly. That was Nicholas Kirby and Leon Ballard, co-founders of Leased. And that's it from Property Matters this week. You can get in touch with the show on social media at iPropertyRadio or email hello@iPropertyRadio.com. My thanks to Luke Delaney and Peter Rice on sound. We'll be back at the same time next week. For now, thank you.